All right, welcome to the market recap. Monday, October 23rd. It's a fresh week. Let's get right into it. This was an easy but hard day. It just depends on how you look at it. I didn't follow any of the rules, so I actually didn't do very well. There was a lot of chop. You'll see as I show you. When I say chop, if you didn't get in at the right levels at the right time and just hold, um, there's a lot of whiplash. So you have to remember, like, you have to give something, at least 15, 30 minutes, an hour to do what it needs to do, which is really hard because it's the anticipation. It's like Christmas, it's like, oh, when is it going to open up presents? So it's that's what's really difficult about trading. But let's get into what ended up happening. So a lot of times when they start out on Monday, especially if they're dumping or ripping, is you'll have that first 15 or 30 minutes. They'll have that continuation from the previous week, and then they'll reverse. So you always have to be on the lookout for what we call a gap down reversal. So it's usually 15, 30 minutes, not necessarily, I mean, an hour, but it's a push into a support. I mean, really, there's no support because we've broken most of the support, but it's really, it comes to these ATRs. So let's take a look. So if you look at the left, you have this was last week, last Friday. So you had a drop, a push up into this mid ATR. This is a multi-day, and then the last part of the day you dropped. So this morning you can see we actually we gapped down a little bit, and then we pushed up, but then ultimately that first 5 minutes you can see this wick. It pushed underneath the bear pivot. So anytime that happens, you have to remember you have to be bearish. So use that as resistance until proven otherwise. So you had the 5, 10, 15 minutes. It pushed all the way down, and if you notice, that's why I drew this line. That is the bear pivot for the week, the multi-day. So it pushed right into it, almost got to the mid-range ATR, and then after that 15 minutes was up, it pushed really hard. So this right here was almost 100 points, and then this was almost 100 points back. And then once you broke above, now it's considered, well, I don't consider it a box play because you're outside of it and come back in. So usually when that happens, I would expect it's about 8 times out of 10 that you're going to have then a full ATR range. So remember, a full ATR range can be from the previous day close to the ATR pivot, the -1 ATR pivot, or it could be to the mid-range up to the bull pivot, or it can be open up to the bull pivot down to the mid-range. I mean, whatever it is, this is what you're calculating. See, around 230 down here. This is about right there. So that's what you have to be on the lookout, is for that. Most days you're going to get some kind of full ATR range. You just got to know where to get in on how the setup is playing out. So the mere fact that it came back in above the bear pivot, that right there is super bullish, and so you wouldn't want to expect a gap, full gap fill, but also back to the previous day. And you can see it did that, and then it consolidated around, and then you can see right at 9:30 we didn't clear. So this is what was really interesting. Anything could have happened. It could have. You see how this candle didn't clear above? It could have came all the way back. This is what I was expecting, for it to come back down to the VWAP and to the pivot, and then possibly reverse. But it didn't. So then when the next TPO, the next 30-minute candle opened up, we cracked above it, came up, and then we came back down. So at that point, you can see that we're actually forming a higher low, lower high. But what you have to do is, even if you don't see this, you just always have to be playing a pivot is support or resistance until proven otherwise. You can get stopped out a bunch, but if you get in at the right moment and you just get out at the right moment, then you're really at small losses compared to the bigger picture. Because if you ended up waiting until some kind of possible pullback, you see it came right back and never cracked back below. So that was 666, area 670, and then it ended up completing that move. And then once you see, remember, the rule is if you are above a pivot or below a pivot by 10 or 10:30, well, no, it's not 10 o'clock, it's really 10:30, because that's when the European closes. The likelihood is you're either going to have exhaustion or continuation. So let's take a look right here. You actually close this candle. See how the 30-minute candle closed? This was the 10 o'clock candle. And then the 10:30 candle, we opened above. So now this is support. So if you notice, we pushed up to the fib, we came back, and then once we tag that, the rest of the morning period, we basically trended up. It was really choppy, back up and down, up and down, up and down. But at the end of the day, it actually completed the full move by the end of the morning session. So you see it came from here and went all the way to the mid-range. So that would be considered. I mean, here we have negative mid-range to the positive mid-range. And really, that was a heck of a move. But if you compartmentalize and you played your levels, you can see that you would have made 100 points right here. And so I missed out on a lot of this because I would get in, I'd get out, I would get in, I'd get out. And then I would expect probably a dip down to here, but it never happened and come up to here. And so you're fighting this for like an hour or so, and it's just mentally exhausting instead of just saying, oh, the rule is it's 10:30, you're above a pivot, get in, this is support, put a stop, and then just walk away. Walk away until the 12 o'clock candle or the 12:30. Because if you notice, you ran up that last 5 minutes right before that period ended, and it squeezed everybody out. And remember what you have to wait when you get close to those TPO, because I end up starting the short right here, and I was getting stopped out. And then when it reverses, this will confuse you. You just have to let things sort of play out, shake out, and then see how things react. You have to remember, you have plenty of time. You have a whole afternoon. So if this was to keep going, the odds are you're going to have some kind of pullback. Maybe go up to this fib and then come back down, and then the rest of the afternoon it could just trend all the way to the ATR. Now, would that have happened? I don't know. I haven't really seen that very often where you go. I mean, we do see it, but that's why you have the powerful move when you have a big drop and then for the start of the week and then a push up. You have all these people that were short and they're sort of unloading their position once it cracked back above right here. But if you notice, I'm going to go ahead and delete that. That was your morning period. So in reality, there really wasn't a lot of pullback, major pullback. If you didn't get in right here and held for here, or if you didn't get in right here and then hold for, really, I actually was targeting once it broke here the 14,800 range. The reason why is because that was the high for the afternoon period, and miraculously, if you look right here, you see how you have the bull ATR pivot for the multi-day. So we went from the morning, the bear, all the way to the bull. So if anything, we could have been. I was anticipating possibly a rejection of that and then a chop in between. Well, what did we do? I did that, but then the last 10 minutes it ended up squeezing. So how do you play that? Well, remember, if you're going to play afternoon, you got to stick back to the rules. So I actually that's why it's important to either have that line, because it allows you to sort of mentally see what's going on. But what I do is I go in between. So you see how these candles right here, you have the 30-minute closes. So that's why I have this gray shaded area. I actually drew this. I just moved it. I drew it from there, and I drew it all the way up to that mid-range. So now that's what I considered my zone. So anything below here, this 780 is super is bearish. But really it's anything below that 800, that 14,800. So let's take a look. So that's why it's important to have that. So right when this 12 o'clock candle came up, This is, remember, you always have to be looking for, when you have a big push, this is squeezing people. So you could have a look above or look below and fail. So what did we do? We looked above, we failed below, and then it just kept on going. But look, it found that support in that zone. So you don't want to be chasing this, because that right there is 20, 30 points right there. I was expecting around that 1230 area. You see at 1230, so 1230, we weren't making new highs above this mid-range pivot. So where I faulted, I broke rules. I actually got short, but I was looking for longs like off this pivot to keep going, because what I had was, I was looking at, this was a higher low, lower high, so I was looking at, this was like a consolidation right in here, and then possibly at 1 o'clock, right here, this was going to break out. But hindsight, you can see that everything worked perfect with the rules on, you get in, it's below, it's 12 o'clock, you're breaking below, now you look at the 1230. If 1230 we would have broke above here, then yes, you would be bullish. But the fact that we are below support now, resistance, this is now resistance, think of it as a wall. Any push up, you want to be selling until proven otherwise. So you want to be buying shorts. If this would have cracked above, then yes, I would have waited. You always got to wait until a pullback, because this could end up squeezing up and then reversing again. But you see how pretty much to the T, it broke above about 5 points, then came back down, and then it came down, shot down, came back up, shot back down. So if you look, this is what ended up happening, and it cracked above right here, and then it stayed below the entire time. But you can see for about an hour, it basically chopped in between those fibs, which I guess it means 30-point range. If you're a scalper, that's good, but you had to make sure your emotions were in check, because you had to know to sell here, leave yourself some room, sell here, and then buy for the short here. So this is a lot. But if you would have just got in here one contract, waited all the way until your target, which would be the next fib, then you're looking at, that was about close to 45 minutes to an hour. That would have been a 100-point move, one contract, $2,000. Instead of me, I just sort of fumbled all this, and I was scalping, and anytime you get in at the wrong move and you get chopped out, that could be $200, $200, over and over and over, and then it just starts mentally screwing with you. That's the reason why it's important to just sort of look at the bigger picture. So let's take a look. So now that you see that we are not, we're breaking above, we're consolidating below that bull pivot. This was considered, you could see, a look above, and this closed, so that means it was a look above and fail. And you see how these candle wicks were not closing above that multi-day here on the left. That's what I'm looking at. So now that's considered, we are now still considered in this box play, so anything can happen. To me, what this is looking like is you have this hump, you have this hump. So as long as they hold this tomorrow, and if they break out of this sort of trend right here, then we could actually, this was about 320 points. This could possibly run up tomorrow all the way up to the mid pivot. And if you look at the bigger picture, that's why I like looking at that 30-minute chart. You see how all from 2 weeks ago we're hitting this trend. So if anything, just because we failed and we dropped a lot last week doesn't mean that we can't push up, the beginning of the week, and then say come Wednesday we could end up failing and then coming back at the end of the week, and we could end up back here or below. So we're just playing in this consolidation range. So as long as you sort of are aware of where you're at, know to go long above or short above, and sort of be situational aware of the bigger picture, you'll do fine. And so, like I said, the rules are 12 o'clock. Did we hold that high, or did we reverse? And if not, then this is your half back, and then now you're targeting down here. And sure enough, what did we do? We came here, and then it just lost momentum. It would chop you around, come down. It never really wanted to come back. Now, that would have been, I would have been pretty bearish if it came back to the close of last week. That would have been an interesting move. But the fact that we held this tells me that if we end up gapping up around above 800, then the likelihood is then we're going to start moving on to the next fibs and into the mid ATR on the multi-day. So big move today. Lots of points. You can say we went from the mid to mid. You just had to get in at the right area and just have one contract and just hold for at least 30-45 minutes. I mean, that is the hardest thing, and that's why I personally did not do well today, is because I was in the scalping mentality and then not really paying attention to the bigger picture. Hindsight, it's always easier looking back, but you always want to get in at those key pivotal areas and just trust them. I mean, if this would have failed with a closed candle and then we would have held underneath there, then yes, this would have been a look above and failed. But you see how you had all these candles wicking and you had like multiple 5-minute candles above? This tells me that we're holding. You see how you had one big candle here and then one big candle down? This is where your look above or look below and fail happens. See, look right here. Look below and then push up. When you start getting above and you're chopping around above, you're sort of holding this area. So the likelihood is you're going to be going to the next pivot. When will it happen? I don't know. I mean, this could happen in one move in about 15-30 minutes. This could happen in an hour, and so all you need to know is it's your time periods. This was 10:30. We were above. You want to anticipate that the rest of the morning session until 12 or 12:30, you're going to be playing within this range. I mean, this is a pure great lesson on why I keep saying the 10:30 rule, or hey, you didn't make continuations at that 9 or 9:30 candle. There's reasons for that. The first 15-minute push down into a level, if this would have cleared and held below, then yes, we would have had more continuation. But you have to. This is how they fake people out, and then bigger the faker, bigger the move. So when you start seeing these fakes, this is where it's trapping a lot of people, and it's that liquidity sweep, and then it's getting people trapped to where it's able to give them that bigger push. So anyways, good luck the rest of the week. I'll be back on tomorrow for another review. You saw what I'm looking for a move for the rest of the week. You can see that this candle closed, so you want to be looking back at that 665 area as support. As long as we don't break back below that, then I would be bullish for the beginning of the week. They sort of showed their cards today. If they would have held underneath there, then yeah, we would have had more continuation. But this is how they play the game. They reset it midweek and then they drop it back down. So until then, you have to be nimble and sort of play the trend if you are an intraday trader. So all right, until tomorrow.